Hello, everyone, and welcome to another episode of Investor Conversation. Today, I'm talking with my good friend Christophe Nour from France. Me and Christophe, we met in the Abu Dhabi Finance Week in Abu Dhabi last year, and we created a friendship, and we talk weekly about markets. So I thought it was a good opportunity to put it on a video. Hey, buddy, how's it
Hi,
going?
Mitris. Hi, everybody. How are you? I'm doing great. I'm doing great.
I'm doing great as well. So I wanted to get you to do a video together because you told me you were going to Omaha to the Berkshire Hathaway annual shareholders meeting, which I'm so jealous, by the way, that you went and you were sending me pictures. So please tell me the details. What happened? How you came about and decided to go? What happens there? Because I watched some of it on CNBC and on YouTube, but I want to know what it feels to be there. Is it crazy? Is it like so many people as they show on TV? So please tell me, what is the whole story?
Well, we were 40,000, 50,000. So yeah, many people. It
Okay.
was my second time going to Omaha,
Mm-hmm.
and last time I went was in 2022,
Mm-hmm.
and I wanted to see the guy uh, before he passes away. That's the catchphrase,
Yeah.
and I was 22 at the time, and still, I knew I wanted to be an investor, and why not learn from the best of the best? So it was a symbolic thing to go to Omaha and see what people are saying about him, meet a lot of like-minded individuals, and that's exactly what happened. So I made some friends in 2022, had a lot of fun, and the conferences were great. People have to know that it's not one day of conference, what you see on Yahoo Finance, the stream, but it's a whole week of conferences. Warren Buffett is only speaking one day,
Mm-hmm.
but for the rest of the week, all the big investors, the other best investors in the world, are organizing conferences. So every day, the morning you have a conference, the afternoon you have a conference, the evening you have a conference. Same thing the day after this. Same thing the day after this. So if you are an introvert, that could be hell, but most investors are introvert, and it's 1 week which is challenging because you talk a lot and you listen to people a lot, and our job is basically sitting and reading, so that puts us out of our comfort zone, but that's worth it, definitely worth it. And I made some very good friends over there. And for this year, so it was 1 month ago, I went to Omaha because Charlie passed away
Mm-hmm.
uh, at the end of 2023, and this year was definitely special. Even if he was still alive, it would be very special because it would have been 100 years old. So that would be a short movie or some speeches from him. So I booked my tickets already. I had my tickets already, and I told everybody, okay, I'm going to go for Charlie being 100 years old.
Mm-hmm.
Unfortunately, there was only Warren Buffett speaking at the stage of 40,000 people, but still, it was definitely special. And I guess everybody that came to Omaha this year in 2024 felt the same way. This year was definitely special. And the architect of Berkshire Hathaway was no longer here, but here we are with 40,000 people, 50,000 like-minded people sharing our passion about investing, talking about Warren Buffett, and sharing stories about how we discovered investing. We shared our investing journey, and you meet a lot of very interesting people. And strangely enough, a lot of young guys. So that's good. I was not the youngest one out of the crew,
Mm-hmm.
and that's good. You meet very good friends, and actually, I rent uh, Airbnb with friends that I met 2 years prior in 2022. So that's good. What do you want to know about the meeting? That's conferences all day long. and
So,
talk pitches all day long.
so
That's why I'm here.
what I'm guessing I'm a major shareholder of major, not a major. It's a major part of my portfolio, Berkshire Hathaway. So I'm guessing there you're not gonna meet too many Bitcoin people and cryptocurrency kind of folks, right?
You can find them if you look for them, but I
Look
don't
for
think
them.
I don't think many people are hodlers or
Yes.
I don't think many people invested in GameStop or AMC or all the meme stocks or NFTs. There are a lot of shareholders that are over 50 years old, 60 years old, 70 years old, and they only have Berkshire Hathaway in their portfolio.
Yeah.
That's what most people have when they
Yeah.
go to Omaha. So not a lot of Bitcoin hodlers.
Yeah. You know what? Sometimes we go to these conferences and some locally and some internationally you have to travel to go. And I have been in a couple of them in Cyprus in Limassol. And you get there and you start talking with someone, and the first thing that comes out of their mouth is, did you buy GameStop or AMC or whatever the meme stock is at the time or whatever the meme coin at the time it is? And then once you get asked that, you say, okay, I'm not gonna get into a serious conversation with anybody. So I'm assuming going there, that's why I ask you, you're not gonna meet any of those, even though some people they buy some meme coins, but they have some good stocks as well. And but my question is, most likely you're gonna start talking with other value investors, with other people that do this in a serious manner, and they have the same thinking like you do. At least the value investing, the stock picker, the guy that follows the news and the developments and knows exactly what is buying and what is selling. So it sounds like fun to be around these people like for a week. Did you stay there for a week, or you stay less than
Yeah,
that?
for a whole week. Yeah.
You stay for the whole week? Oh wow.
Yeah.
And
Yeah,
then
that's definitely a good. Yeah, go ahead.
and how you end up going outside the Warren Buffett house?
Well, everybody can visit his house, and you have his address that's
Yeah.
completely public. So I rent a car with my former boss and spent the whole day going to visit and took some pictures at Warren Buffett's house. And we took some pictures where Warren Buffett is working at
Mm-hmm.
the building. And we visited Omaha, see the Nebraska Furniture Mart, some cliche. And you see, there is a documentary about Warren Buffett that goes to a McDonald's every
Yes.
day and takes his breakfast over there.
You
Uh,
went to the
we
McDonald's?
we went to this exact McDonald's,
Oh.
ordered some things just to do it, to have done it, and took some good pictures. And that's exactly the McDonald's you see on the documentary. So life is
Wow.
coming to reality. That's good. That's great.
Oh
That's
wow.
great.
Yeah. Oh my God. That sounds like fun. That sounds like fun.
Yeah. And I mean, I don't know how many times I've watched this documentary, but if you're older than me, maybe
I
you
watched it
have
as
watched
well.
it
I
more
watched
than
it as
me.
well.
So
Is it like
that's good.
is it the 60-minute one?
Yes.
Yes. Yeah. I watched it multiple times
Yeah, I
on
think so. Yeah.
on YouTube. And knowing you, I think you are a bigger Charlie Munger fan than you are Warren Buffett fan, correct?
Oh, sure, sure, sure. I have a wallpaper, a poster of him in my
Yeah.
room. So yeah, definitely big fan. Uh, uh, and you sense the difference now that he's no longer there on
Yeah.
stage,
On
because
stage.
most of the time it's, I don't know, for the Yahoo Finance streaming for the big day, the big shareholder days, it's maybe 7 hours, 6 hours, 7 hours of talking. Most of the time, Warren Buffett talks and then go into technical terms, has a beautiful answer, and then he turns to Charlie, okay, and ask, okay, what do you have to add, Charlie? And then Charlie, in one line, you have a punchline, and everybody laughs.
Yes.
Everybody laughs, and then next question. So technical, and then he turns to Charlie, punchline, and then
Punchline.
so the spirit of the meeting was Charlie. If you want jokes, that was your man.
Yes.
And you feel that he's no longer there. It was different for this reason also. We did no longer have the punchlines at the end of each questions. So that's different. But yeah, I'm a big fan, and he lived until 99, so he had a lot of quotes, a lot of speeches, a lot of books written about him. uh Still there. He's still my hero.
Yes.
Even though he is no longer here, still here. I can continue to learn about him for the next 50 years, so that's good.
Yeah, we were in Abu Dhabi the night he died. I remember I was in my room and we got the news. We all got the news at the same time from Bloomberg,
Yes,
and we start texting each other. It was like late at night, and we start
it was
texting
like
each other.
1
Oh,
a.m.
yeah, it was like 1 a.m. We went out and then we went to our rooms, and I remember getting the text. And as soon as I got the text, I got the notification. I went online on eToro and I saw everybody was posting it, and it was like, it was sad. You were the first person I text. I was
Yeah,
like, hey, you told me, yeah, bro, that sucks. And it was like, it would be cool to be 100 years old and be on stage and still telling jokes and giving punchlines. Yeah, but 99 years full of wisdom. He had a good life. Rest in peace. Rest in peace, Charlie.
yeah, we will miss him. But yeah, he did jokes until he died. That was when he went to the hospital and there was a nurse saying, "Okay, how are you, Mr. Munger?" He said, "I'm dying. How are you?" That was a punchline for his last day. So yeah, that's normal. That's good, and we will all miss him. But that's the way life goes, I guess. So yeah, we'll continue like this, and may I will continue to go to Omaha next year, the year after this, because the spirit is still here. People are still passionate about the value investing style, the Warren Buffett style, and this is the only conference like this where you have 50,000 people coming. And sorry for you, there is no Bitcoin holders over there, but the thing that we speak about here are very fun and very interesting. And during an evening, I joined a group of old Berkshire Hathaway shareholders. When I say old, it's because of the difference of age, and they were all above 80 years old. So, and they knew Warren Buffett like they were friends with him, and they had invested in Berkshire Hathaway before it was this big behemoth conglomerate, etc. They invested in Berkshire Hathaway when during the conference there were hundreds of people, so they could ask questions, and they shared the personal anecdotes about Warren Buffett, about his children, and you definitely learn a lot. I mean, these anecdotes are not in books. These are not in interviews because nobody shares them. It's in real life, that's private. And the only way you can get these small amount of details about Warren Buffett lives and his surroundings, that's when you go to Maha. So the spirit is definitely there.
So, what do you think? Because it's a major position in my portfolio, and my co-beers as well. So it's not just me. And and then Warren Buffett, he's getting up there. He looks he looks sharp though. He looks like he has another good 10 years of doing this.
Let's
But
hope so.
let's hope so. Yeah, of course. But the new number two, I saw the press conference, and the new number two is gonna have a lot of work to do, getting that balance sheet with almost $100 billion, not knowing what to do with them, assuming, and God forbid, something happens to Warren. What do you think happens to the company down the line if something happens to Warren?
Well, the biggest risk people had about Berkshire Hathaway is succession plan, and we've risked for 10 years. And we said, okay, what if he dies? What will happen to the stock? Will the stock tank? And you know what? He hired some great people, some great managers. You have Greg Abel, the new Canadian CEO, that will
Yeah.
take its place. And He's been with Berkshire for years, for decades now. So the risk that everybody feared is no longer there because Buffett has prepared the succession plan beautifully. And for the portfolio, I guess Ted Weschler and Todd Combs, currently two portfolio managers, they will manage the whole portfolio. And I don't know if Greg Abel will do something about the portfolio. Maybe he does. I'm not an expert about Greg Abel, but if you thought he was a great manager, he's even better than this. And now Charlie Munger was not on stage, so we had Greg Abel instead, and he's impressive. He's impressive. I didn't know he was that good. I thought it was good. He was good, but it's even better. So I don't worry at all about the succession plans. I don't worry at all about the new CEO. He's a great capital allocator, and I don't know how old is he. Maybe over 60, around 60 years old,
60s,
60,
yes.
70.
60s, yes. So he has
So
a lot.
the runway is here. That's good. That's good. And they have portfolio managers, successful portfolio managers. So I don't see it as a major risk for the next decade.
Yes. I'm sure some people are gonna have their doubts, like always too. People in the markets, they have doubts, even though they even without the reason, some people are gonna have doubts. And that's just part of the game. But yeah, since I'm a shareholder as well, that was always in the back of my mind. But watching the press conferences, the number two seems legit. But the question is, what are they doing with all that cash?
You're
How,
talking about the
how long they
almost
gonna be holding
200
that
billion.
cash, not doing anything with them?
A lot of people, a lot of articles have written about this amount of cash, and it's impressive because that's almost 200 billion
Mm-hmm.
dollars worth of cash, and say, wow, that's a lot.
Mm-hmm.
But if you compare on the percentage compared to total assets, it's not that big of a deal because that's if you compare the percentage of cash compared to the total assets and you see the 20-year average, it's nothing exceptional. It's not at 2007 levels. It's levels we have seen, I don't know, in 2015, 16, something like this. So it's impressive to see, okay, 200 billion worth of cash because it's a big number, but Berkshire is a big company. It's a
Yeah.
big, big company. So 200 billion is not that big. It's not as if he sold all his portfolio and went into cash. It's just that because it's a big elephant, well, the cash sounds big. But in percentage, that's nothing impressive, nothing spectacular. And I've seen a lot of articles written about, okay, now Warren Buffett expects some crash. No, nothing special.
Yeah, the Berkshire, I believe, Berkshire's market cap, I believe is must be like 100 billion or something like that. So 100
Something like this.
billion. So it's 100 billion in cash, so it's like 15% around there, 10, 15%, not 10, almost like 15%, which is if you put into perspective, percentage wise, it's not a big deal. But with with 100 billion, you can buy a lot of stuff. But this is not the best environment that Warren Buffett likes to buy. Doesn't like to buy expensive. He never did. So what makes us think this gonna change his mind now? But the question remains: if the guy who got the money together didn't get to spend it, is the next guy going to spend it? That's another question that I have, and I'm not sure what the answer is. If it's worth spending it for the time being, it's better putting them in treasuries, and that's what they do.
Exactly. You have a safe, risk-free 5% yield.
Yeah,
That's good. I mean, with
it's
this
very
current
good.
environment, you don't have many opportunities with big companies. They invested in Chubb recently, insurance company,
Mhm.
but they don't see many opportunities. 5% is enough for their size, waiting for a big stock crash, waiting for better opportunities. I mean, 5% completely risk-free, that's not terrible. That's decent. It's
It,
just that. We have seen Nvidia, we have seen Bitcoin, so we are not impressed by 5%. But 5% for this amount of billions, that adds a lot to the net income. So it doesn't sound like a bad deal to me. They play it safe for the long term. They don't want to risk their big cash balance. And 5% is more than enough to sustain and wait for the next big opportunity. I see this as a smart investment.
Me too. Me too. It's just some question marks that you're putting yourself wondering sometimes if what is the next move? 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 Okay, so let's shift to Europe. What's going on in Europe?
What's going on in Europe?
Yes.
In Europe, I saw yesterday that the CAC 40, so the French index, it was like 10% up, and then things crashed. So now it's flat for the year. And you compare it with the Nasdaq and the Nvidias of the world that only go up and up and up. So yeah, Europe is a mess right now, but maybe it will be a temporary mess, and you definitely see some opportunities right now in Europe. There was some good, great businesses that were trading at an expensive price, and now that everything has dropped 5%, 10%, 15%, 20% or more, you begin to see some crazy deals. And I've started buying some other stocks in Europe recently. So that's good. I I've seen many political reasons to be bearish in Europe, but that has been the case for many years, and we've seen some similar drops in the past. For example, in French elections, you can say that that's a mess, and the people in France are stupid, and the country will not last forever, or everything. That's very sexy to say it, and you sound very smart when you say it, but we've seen this kind of drops before, and we will see these kind of drops in the future. That's part of the cycle. That's part of markets. Sometimes you see drops like this, and if you don't buy when stocks are getting cheap like this, when do you buy? That's a very good question. So you don't want to buy when it's at all-time high. That's my personal style. Maybe people like this.
Me and you both.
But when stocks crash like this for external reasons, the businesses I'm buying right now in Europe, their businesses have not changed because of the recent drop, because of the regulation, elections, etc. Macro. The businesses are still strong. The management has not changed. The vision of the company has not changed. The capital allocation decisions, they have not changed. Nothing has changed, but external factors. And if the companies I'm buying are managed by smart management, that takes advantage of drops in price. You can talk about capital allocation, M&A, or buybacks. They repurchase shares when it's trading cheap. So you should be confident investing in Europe if you invest in quality companies managed by great management, great CEOs. But that's a lot of research, and that's why it's good to live in the country you invest in. If you live in Cyprus, you know a lot more about Cyprus companies compared to French or Spanish people or Germans, etc., etc. So yeah, that's my opinion in Europe. Crazy deals. I don't know if the drop will be temporary or for the whole year we'll have no gains at all or market crash. I don't know, and nobody knows. What I know is stocks are dropping, and I've done the work before. I've done the work on intrinsic value, and I see some deals right now, so I'm taking advantage of it. That's what I have to say about Europe. What about you?
So I'm not really invested in Europe. I'm only invested in one company in Europe, the French LVMH. I'm sure it's a very famous, a very big company in Europe.
Yes.
It's in the top 5 largest companies in Europe, and everybody knows Louis Vuitton and all the brands that Louis Vuitton has. LVMH has under the umbrella, and I'm a macro guy. And I prefer to stay in the United States, which I understand, and I know how things are done. And looking this from the far, and please correct me if I'm wrong, the French election is on the June 30th.
Yes.
So we have another 10, 12 days for these things to know which way it's gonna go. and then there's the second round the following week. Is that how it works?
I think so.
The second round of the election. So the speculation is that if the president Emmanuel Macron, and forgive me for not pronouncing his name right, loses and someone else becomes the president, the new president won't be as friendly to the foreign capital that flew into France after Brexit. Okay, that's a fair reason for people to be afraid. But what that has to do with the individual company?
Yep. LVMH will maybe have a small impact, suffer from a small impact, but the vision of LVMH has not changed at all.
So we just getting the opportunity that is been given us by markets and by people. I wouldn't say panicking, but just de-risking in a sense. Now I don't see any long-term problem happening in France. Today I read that it lost the title of the Europe's largest financial markets. It gave it back to the UK. Don't worry, give it a couple of weeks. They're gonna take it back. That's not gonna change. So LVMH for me is a company that is the only European company I have in my portfolio, and this is a perfect opportunity to add to it, in my opinion, and I will add to it, and we'll have another 10 days, because I believe it's 10% down in the last week, if I'm not mistaken.
That's okay.
So it's 10%. It's not biggie. It's not big deal. 10%. We're not sweating with 10% in a week. Okay. So for me, it's just an opportunity to increase. And from all the countries in Europe that I will consider to invest some of my money, they're not that many. It's just France and Germany and the UK. Everything else in my opinion, is too risky. And I don't know too much about it. That's why I prefer to stay in the US. But you are more diversified in Europe, aren't you?
I have some stocks in Europe, and before it was a small percentage of my portfolio, but as I'm buying, the percentage increases. One position I like a lot right now is Stellantis, the car maker, and the views are very pessimistic about the company, and the industry is very bearish at the moment. Everybody's panicking. Nobody wants to invest over there, and because everybody is bearish, the price is, in my opinion, too low. The valuation is just too low for the quality of the business and the quality of the investment. So people are afraid about EVs or not, Chinese competition or not. What do you do? How do you generate free cash flow? You have to invest for the next generation of cars. What will you do? Stellantis has one of the best margins in the industry. They have one of the best cash flow production of the industry. The vision is clear. They have approximately a 7% dividend yield, and they do some buybacks. So buybacks plus dividend, that amounts to 11, 12% of the market cap. That means the return to shareholders is 11, 12%. And it has been the case for several years now. The plan is very clear. So right now they want to stabilize margins, low double-digit margins, and return cash to shareholders via big dividends and big buybacks. I see this as a low downside, medium to high upside. I would say medium upside. So safe bet, and the price right now, they have a P of 3 or 4, something like this. Again, you can't compare it to the S&P 500 or the Nasdaq with tech valuations, but if you compare it to the to the auto industry, that's still cheap to have a PE of 3.5 or 4.5. That's still cheap. So I think the company is neglected at the moment. Everybody's bearish, but we will see. I started a position a few months ago, late 2023, I think, and it has gone up a lot. And now we see a 30% drawdown, 30% decline. The business has not changed. Literally has not changed. The plan has not changed. The return to shareholders, big dividends, big buybacks, strong, decent margins, it has not changed at all. The only thing that has changed is maybe the other auto companies and the mess in European elections. So I don't mind having the temporary setback at the moment, and I
Mhm.
take advantage of this to buy more shares. So
Yeah.
you can find these kind of opportunities right now if you have done the work before. I don't know enough the luxury sector, so LVMH, Hermes, um, but these are businesses that will last 50 years. If you had to bet one company that could last 50 years or even 100 years, it will not be Apple, not Google. You can never know what will happen. You don't know if Nvidia will last 100 years, but I can do, if we do a bet right now, I will say Hermes will live 100 years. So
As long
uh,
as long there are people in this earth with money, Hermes will be selling those Birkin bags at
yes,
a ridiculous price. Okay. And the same bags they're selling now, they're gonna sell them 100 years from now.
yeah,
So
10
it's
times more expensive.
more
That's
expensive, yeah. No, I
I've been
mean
doing a lot of work
design will
recently
be the
on
same.
the bags will be the
Yeah,
bags will be the same.
it'll be the same. The design will be exactly the same. They're gonna have the same names and they're gonna look the same. The packaging is gonna be different, but they're gonna be selling them to the end of time.
Mm,
And you're right. If you want to make a bet which company will be alive will be around in the next 100 years, yeah, the designer French, the high-end designer French companies will be around to the end of time, and that's
yeah.
the reason I'm invested in LVMH, and that's also the reason I have my eyes on Hermes.
Yes.
Hermes as
The
well.
price
It's
has
more
always been too
expensive.
high. Yeah.
Yes, yes, always. Oh, it's always expensive. Hermes, the bags are expensive. The valuation is expensive. But I have it there and I watch it every day and just waiting for the moment to enter. Despite this volatility, because of the elections, it didn't get too much of a hit, Hermes, just to realize how strong of a company it is. But yeah, these two are by far my favorite companies in Europe to to invest. One of it I'm invested, the other one just a matter of time. And I know you like energy. So
Well, yeah.
tell me what is going on with energy.
Yeah. But before that, we were talking about quality companies and Hermes
Yeah.
and the fact that they were always expensive. They will
Mhm.
always be expensive
Yeah.
because you have the almost certainty of the earnings of future years. When you put
Hmm.
the simple valuation method is a DCF, you put your estimation of the future cash flows, and depending of how sure you are of the cash flow, your model is worth a lot or not. What is great about these names is that the strategy has not changed. They have beautiful pricing power, so you already know that the business will get better and better and better. Same thing for Ferrari or for Costco. This is why these businesses are trading at 40 times earnings, 50 times earnings. It's just that they have a beautiful moat. For Ferrari, the Ferrari cars are sold 2 years in the future. So they
Hmm.
already know what the profit will be next year and after this.
Yes.
And the moat is so beautiful. Most Ferrari car buyers are Ferrari customers. So these are the rich guys that have one car and they want two cars and they want three cars and they want some services or finance project or everything. So the customers are here, they have money and they lock their position to say, okay, I want this Ferrari. Okay, you have a 2 year period before you get it. Okay, no worries. Let me pay you up front and that's it. So you have a backlog of 2 years. You know exactly what the profit will be in 2 years, and you pay your price for this. It's not like many companies in Europe, especially when you have this uncertainty and you don't know if next year you will make a lot of money or not. For these quality businesses, Hermes or LVMH or Costco or all these companies, they don't get hit by political pressures. They don't get hit by external factors because of the quality of the business. And
Mhm.
everybody knows this. So everybody is willing to pay a little more to sleep well at night, to sleep, to have
Yes.
their investment now and sleep well at night for 10, 20 years. They know they will never lose money. There is a price too high to pay for some stocks, yes, but that's why you will never see Hermes with a PE of 8. Or
No,
if the company goes bust, that would be terrifying. I don't know what the valuation was in 2008, for example, when everything crashed, but I guess it was not that cheap. It was reasonably priced.
no, it wasn't because the majority of the stock is held by the Hermes family. The
Yeah.
Hermes family, they are like 15 or 20 years of the empire, and they hold all the stock. And now the LVMH CEO, his name is
Uh,
Bernard. Uh,
yes.
he bought 4 or 5% of Hermes as well. So the supply of the stock, um, the demand is more than the supply of the stock. So mm, don't don't wait too long to don't wait for it to get to 10 times earnings. It's not gonna happen. It's never gonna get there. So it's just
Yeah.
the amount of how bad the French elections are gonna get, because it's in the last week that things like start gonna hitting out between the candidates, and it's there when you're gonna see some volatility. So hopefully we're gonna get a chance to I'm gonna get a chance to increase my LVMH and hopefully enter Hermes. That will make me happy if I can get these two, and they pay a decent dividend as well. So that's another plus. But yeah, I mean, sometimes you have to look to the country, what the country does well. France, they do well wine, they do well cheese, and luxury goods and perfumes and all that. I mean, even if you are wealthy already, do you have to look into anything else? If you're a guy in France with a lot of money and you want to invest your money, do you have to look elsewhere? Maybe for diversification, you want to buy some Microsoft just so you can say you're diversified. But if you have 80-90% of your money into that, you're never gonna go past, because that's the market for rich people. So rich people
Yes.
buy expensive bags even in recessions. I don't care if it's a recession, a bad economy, the unemployment is high. Rich people, they're gonna buy the latest Birkin bag from Hermes, whatever the season and the economy. So that's the mode. That's the mode that others cannot recreate. And the
Yeah.
quality, of course, and the quality made in France, because they make them in France, correct?
Yes. I think everything is made in France. I've
Everything
not
is made
done
in
a
France.
deep dive on it, but I think so. Most of the thing is built in France, yes.
Yes. So it's not made in Southeast Asia, shipped to France, and then sold as. No, the quality is there. So we talk so many times on this. We talk so many times on the podcast and on the channel about LVMH and the quality and the company, and it's it's amazing that it's been going sideways for the last for the last few months now. But I have no doubt it's going to come on top, and the management is top notch, by the way.
Yeah. I think Bernard Arnault appointed one of his son this week to be the next CEO. I think he made his decision. I have a doubt, but maybe I read something about it. And all the family is in the business.
Well,
They
yes.
are all experts. And same thing for, like we talked about before, about Warren Buffett, about the succession plans.
Mhm.
First, Bernard Arnault said, okay, I will continue to manage LVMH for at least 5 years. I think now I don't know how old he is right now, but he will continue. He has no point of retiring next year. He will manage the company for the next 5 years, I think so.
Mhm.
And after this, the company will be in charge
Yeah.
of the conglomerate. So they will last, and they will be here in 10 years, 20 years. They will be here. And they, by the way, they wanted to buy Hermes at the time, but they failed because Hermes did a defense and bought other stocks like this. So you can't get a majority percentage of the company. But yeah, Bernard Arnault tried to buy Hermes, like he bought other companies. But
Yes.
Hermes said no, no. Basically, that's the story.
Yeah, I was surprised when he bought Tiffany and Co. When was it, like 2 years ago? He bought
Yeah,
he bought
2020, something like this. Bit
2020,
before.
yeah. When he bought Tiffany and Co. from it was the only luxury American company in jewelry, and he got that as well. So I have no doubt he's gonna give his best shot to buy, maybe not buy the whole thing, Hermes, but a good a good portion of it. So okay,
Yeah.
so
By the way,
yeah.
if you talk about pricing power, if you're a macro guy, you can say most of the products they sell, LVMH, are sold in China. And as Chinese people are getting a better quality of life,
Hmm?
they have more standards or better standards of living. So they will buy more bags. So there is a big macro bet to say people in China will buy more bags from LVMH. I don't know if there are similar bags, but made in China, like Chinese luxury bags. Can you say one name?
Okay, I don't want to name names, but I I bought a couple of Louis Vuitton bags myself. I went to the store and I bought them as a gift. Okay, not for me, it's a gift. If you don't have any money, if you're not making any money, and you walk into a Louis Vuitton store and you buy a bag for 3,000 euros, okay, it's gonna sound crazy to you. But for someone that has money and can tell the quality between what you buy for 200 euros and what you buy for 2,500 euros, the quality is there. There is a reason why they can charge that kind of money.
Yes.
And as far you say China, it's not just China. The half the world is coming up to the first world in the next few decades. Africa, Southeast Asia, there are millions and hundreds of millions of people that are going to come out of poverty. And what they do when they come out of poverty and get into the middle class, they want to buy luxury goods. So it's not just China. China will continue to be, because it's in their culture to buy luxury goods, luxury watches, expensive stuff. So it's not just China. So as a macro bet, I believe the demand will be there, not just from China, but will continue from the United States, from South America, as their economies get better, and Southeast Asia. So if you look it in the macro view, it's just a solid bet. Now, if you can't take the volatility, an election there, an election here every now and then in France, or the European Union, whatever the case may be, maybe a coronavirus every few years. If you can't take that, then you're not going to make any money, whatever the macro view is. If you can't take the volatility, it doesn't matter what the company is, you're going to have ups and downs. So for me, that's how I look at it. The macro view is there, the big picture is there, okay? The management is good, so why not? Why not stick with it
And
and buy more when you get the opportunity?
and the philosophical analysis could be, I read something recently. Correct me if I'm wrong. Maybe please double check, because I've not done the analysis myself, but I read something about the value added to the society. If you had to invest in one company that creates most value to people, not shareholders, but people, creating jobs, creating real value in the society, it's not Walmart, it's not Costco, but it's luxury goods, because of the value added at each step of the process to create a bag, for example. And if you wanted to do the most good to society, invest in luxury companies. That was the pitch of the article. So yeah, many things are green flags for LVMH. You do the analysis right, you do the management right, the macro bet, more people are getting richer, luxury goods, and as a philosophical note, you do good to society. That's the pitch. Again, please double check if I'm wrong.
I never heard that before, and I have no doubt that you're making this up. I'm sure you read it somewhere. But and then another point I want to make about LVMH, about management. During 2020, when everything was diving down, everything was in a trade dive, and the stock was going down like crazy. He made something that, in my eyes, I said, okay, he's a great manager. I'm talking about Bernard Arnault. It was when he cut the dividend in half. He cut the dividend in half just to secure the future of the company, even though he owns the majority of the stock. So he was taking a pay cut on his own check just to put the company in a great position for the future. So when the market got crazy, when he cut the dividends, because that's what happens. If a company cuts a dividend by half, some people are not going to like it and just going to sell the stock and get out.
Yeah.
I didn't see like that. So okay, he's serious. He's not just there. He's serious about the long term plan of the company. So that was another plus for me. And I didn't buy at the time because I was waiting for a good entry point. Now I don't know if I got the best entry point, but since I bought, I never sold anything, and I'm not planning to in the near future. And I'm actually planning to increase in the next few days.
Yes,
So
that's good. I'm sure it will do good. The track record is here.
yeah,
The performance is not that good. It's not 20% per year, but you will definitely get more than 10%.
yes,
Definitely get, because that's the way the company works.
yes,
And I've not compared the performance of Hermes too. I think Hermes has had a better performance. You
yes,
also get
it
uh,
did.
more expensive valuation. So if you compare with the same valuation, maybe
Mhm.
you have different metrics. But if you have these two bets on your portfolio, I don't think a lot of things can go wrong for the
Yes,
next 10 years. I
yes,
don't know about the performance, but I'm sure you will not uh, be sad because you own LVMH and Hermes. We are creating a portfolio right now. Let's sell all our positions and do do it right now on a mock portfolio.
and another thing about LVMH, and then we're gonna switch subjects. During World War II, between 1940 and 1945, the production of Louis Vuitton did not stop.
For what kind of product?
It wasn't a lot, but they produced bags during the war. So that tells you that not too many things can stop them from
Oh
making.
no, yeah.
Yeah.
Even
So
even in COVID, they use. Did they use uh I don't know, something from perfume or tissues or fabric to sell some masks or something like this?
whatever the
Well, they
whatever
can
the case
navigate every environment.
is, yes,
They're
they're
just too strong.
gonna make a product for it.
Oh
Okay,
yeah.
let's talk about oil. I know you like oil. What what is happening there?
Oh, that's cyclical.
Yes.
That's the environment changes. Sometimes it's very bullish, sometimes very bearish. My position has not changed. I'm just copying what Warren Buffett has to say about oil
Mm-hmm.
and following the best investor in the world like this. So in oil in the portfolio, I have Occidental Petroleum, which is the favorite oil bet that Warren Buffett has at the moment.
Yes.
The investment case has changed before because in last year they wanted to return capital to shareholders.
Mm-hmm.
So they said our focus is dividends and buybacks. And then with the current oil environment, they did an acquisition, not out of the blue, but it was not the main point. And
Mm-hmm.
that now the main focus of capital allocation is generating additional cash flow thanks to the acquisition, and then buybacks and dividends. So the investment case has changed a bit. I'm monitoring it. Warren Buffett is buying the stock continuously when it's trading at $60 per share. So you have a psychological floor at $60 per share. And for the past 2 years, it has been rebounding at $60 per share and then up, down, $60. Warren Buffett buys up and up again, and no results for the past 2 years, but Warren Buffett is still buying it. So it's not an enormous part of my portfolio. It was in the past, but because I bought other companies, it's no longer 20%, 25% of the portfolio. But yeah, it's still a big position. And my other big position for oil is TPL, Texas Pacific Land. This company I first bought in 2020 when the stock price drops and the oil price was much lower than it is today. And the company is a royalty company, so they get a percentage of every profits that is made. The investment case for TPL, it's called Texas Pacific Land because they own land in Texas, something like 900,000 acres of land. And on this land, there is oil. So big companies come to TPL and say, hey, can I drill your oil? TPL say, yes, I take 4% of all the profits that are made here. I'm summarizing everything, but that's the way the royalty company is working. So this is one major part of their earnings. And the other part is some oil production, oil facility. So they have water. So water and oil. That's the investment case. These two components are growing nicely. The company has no debt at all. They have a lot of cash. For the past 20 years, they have done beautiful buybacks. And now that the stock is trading quite expensively, I would say above 30 times earnings, the management said, no, we will not do buybacks because it's quite expensive. We'll do dividends instead. But our philosophy has not changed. Our business model has not changed. Complete royalty models with one of the highest margins you have ever seen, 90% margins, almost no cost. Now the governance, I would say that could be a red flag. The governance is really bad. They have a trial right now, and the biggest cost they have is professional cost, regulatory costs because of the litigation with shareholders. They wanted to do a split or not. They wanted to issue shares. That's bad for shareholders. So there is a shifting management. This was a trust before. Now it's a C Corp. That's a complete mess. But if you look at the track record of the company, it was always like this. It's a mess with the management and governance, but the business model is so strong and the business model will be here in a few years. Don't worry about it. The margins are so good, the cash flow generation is so good that I don't even care about the governance of the company. I'm monitoring what is happening. I'm watching everything that is happening. But even if there is a trial and the biggest cost is litigation, that doesn't change my investment thesis. So I will still hold it. And I think 2 weeks ago, the stock was included in the S&P 400. So there is no fundamental change in the business. It's just that there is an inclusion in an index. So big institutional funds will be forced to buy the stock. And so there is a buying pressure, more demand for the stock. That means that the stock took off plus 25% in a day for no reason. My guess is maybe they will not sustain and will go down again to a more normal level because plus 25% for no news at all, just for the inclusion, that could be scary. But I plan to hold TPL for the long term. So the business model will not change. And with higher oil prices right now, oil companies will make more money. And because TPL takes a percentage, 4% of all the oil production, TPL will make more money. What is good is that I see minimal downside with the business model because it's a royalty company. company, if there is more cost if to produce oil, if oil price drops for some reason, there are no additional costs. It will not be painful for TPL. They will maybe get less revenue, less earnings, but no additional cost. They will not go break even. They will always make a profit. So again, minimal downside and maximum upside because it's a royalty company and it can scale. People were afraid about the amount of oil that were in their lands, on their lands, but I don't see this as a big risk. The big risk could be the governance and the mess right now with the litigation. So bad governance and the high valuation, which is I think right now at 30 times earnings, 35 earnings. But it's the way the company is working, and I don't plan to sell it at the moment right now. If it goes to 50 times earnings, we'll have another call and maybe we'll have another discussion. But right now, I think it's reasonable. We talked before about quality companies. TPL is one of the best, the most quality, best companies, higher quality companies that I have ever analyzed because of the strength of the moat. It's the best moat. They have the lens. Nobody can touch them. Nobody can attack them. You can't create more lens and create more oil on your lens. They literally have no competition.
You can create land, but you can't create land with oil in it. So, and what is it a big company? What is the market cap?
Market cap right now around 10 billion, I would say.
Oh, okay. So it's a tiny company.
Yes.
In the grand scheme of things, with the companies that we're usually buying, to put in perspective, 10 billion is not a huge company. ExxonMobil can buy it tomorrow for nothing.
Yes. Now 17 billion of market cap.
It's a tiny company then. It's not a big company.
Quite small.
Yeah, if it was like 100 billion and 35 times earnings, yeah, maybe you want to sell a little bit, but you're not there yet, so you don't have anything to worry. And the long-term case for oil and energy is solid, in my opinion. I don't care what they do. I don't care what they say about electric vehicles or energy from solar or wind or that. For the next 20 years, the amount of energy, including fossil fuel energy, oil, and natural gas, to power the world is going to keep increasing for the next 20 years. And there are not that many companies that they actually do that. There are a handful of, I mean, okay, there are like a lot of local ones, but the big players, what are there, like 5 of them, 6 of them? I think is the French Total, the British, the BP, and a couple of Americans, a couple of companies in Asia. So there are not that many of them. So if you want to have like a long-term portfolio and be diversified across sectors, and you like energy, then one of the big players, it's a must. If you don't like energy, then okay, so then invest in something else. But if you like energy and you understand energy, and like I do, and you are, and then it's a no-brainer.
Yes.
Energy is a big one. Okay, so I was reading an article today about Bill Gates. He started a company and building nuclear reactors for energy.
Okay.
Not nuclear reactors, nuclear plants for electricity. And I was like, wow, we went from wind and solar, and then we went back to nuclear. The price of what's the element for nuclear? Not plutonium.
Uranium.
Uranium skyrocketed in the last few months. So they can tell you that we're not going to build any more nuclear plants, but the price of uranium tells a different story. I mean, there are not that many things that you can do with uranium. It's just like a handful of things that you do with it. So yeah, we're going back to that. And France, I believe, has a good portion of its energy coming from nuclear energy, correct?
Yeah, and that's a big debate, but yeah.
What is the debate?
because nuclear is scary.
Yes.
So that's controversial, but that's way cheaper than the rest. And yeah, France uses a lot of nuclear energy. It's one of its main assets. We have, as you said, cheese, wine, luxury, and nuclear,
Yes.
or other things, but that's the key pillars.
Now that you say about wine, I was looking into wine. I like wine. Do you like wine?
Yeah, sometimes I usually don't drink, but it can
I,
happen.
I don't drink either. I'm not drinking every week or every month, but when I drink, and if I'm going to dinner or I'm having friends over and I want to get a nice bottle of wine, most of the times I might choose French, a French winemaker, because they make the best wine and nobody can deny that. And the moat is there. It's not that much of that particular that land that France has. And by the way, I was looking into, I don't know, I'm just a curious person. And the reason why France has such a strong economy compared to the other countries of, of Europe is geology, apparently. The way it's set up, the geology, the rivers, the way they flow top down, and all the land that is perfect for growing from for winemaking and fruits and vegetables. So it's not an accident that it's France that makes the best wine. So we're talking about wine, do you know any
Wine
company?
companies?
Yeah, do you know
No.
any?
There is one American one.
Into it?
The ticker symbol is wine, but I don't even know if they do wine, but just that's just the ticker symbol. No, no, no. I recently studied I did the analysis of a hot dog company,
Okay.
England English, but
Which one?
no wine whatsoever. I did the analysis on one. Now we are talking about alcohol. I
Yeah.
did the analysis of a Chinese beverage alcohol company called Quecho Mutai, very famous. It's the biggest company in China.
Yes.
Strangely enough, it's not trading on eToro. You can't buy it on eToro, and but it's worth more than $300 billion of market cap. So bigger than Tencent, bigger than Alibaba. When I did the analysis, it's an extremely good business, and as you said it rightly about France and the quality of the lens, they have exactly the same thing for Quecho Mutai. It's a spirituals company, and it's part of the culture of China to gift this kind of drink. It's
Mhm.
a white and red bottle, very strong. I don't know, 40%, something like this. That's not vodka. I've never tried it. I don't know. That's when I will buy it, I will do some due diligence and I will buy it and try it, but not at the moment. And you can only do the quality of this drink here in the lands on the lands that the company owns. So they have a couple of acres over there, and the only way you can do the drink is here, and they own the land. So literally no competition. Nobody can come
Yeah,
to your land
it's
and
like
produce another thing.
it's like champagne and cognac, not cognac. Is it cognac?
I don't know. I don't know.
Champagne. So champagne can be made only in France, right? Everything else is called sparkling wine. So champagne
Okay.
can be done and can be sold as the name champagne, can be made only in France. And it's not just champagne. There are like a couple of more things. I believe cognac. Is it cognac or is it brandy? Uh, it can be made only in France. So I'm guessing that's the mode.
Mm.
But the question is, if it can be made only in one place, what is can be scalable, or is it because once you have the mode for a company, then the follow up is can you scale it?
Oh, but you know what? Even though you don't increase the volume, what you can do really well and what they have done is you increase the price. You
Yeah.
have the branding power, so you have the pricing power, and you can double the price, and people will think the product is better. it
Mhm.
tastes better because it's worth double the price.
More
And
expensive, yes.
no change in volume, okay, but the price will move up your revenue, your earnings, your cash flow. A lot of companies do this. They don't want to scale it. If Ferrari wanted to scale the number of cars they sell, it will not be Ferrari because everybody would have one. It will get cheaper cars. No, no. They want to produce less and less and less, fewer and fewer cars. You have extremely high demand, low supply, and that's the way they make money. So they don't want to scale it.
Ex to be exclusive. Exclusivity when it comes to cars and to luxury goods. You know how they get you? So you have your money, okay? So you're working. Let's say you made 100x on Alibaba and you took some money out. You say, okay, I'm gonna go buy myself a nice bag or a nice watch or whatever the case may be. And you get your money, you go to the store for the first time and tell the person at the store, I want to buy that watch for $10,000. Even if they have the watch at the store right in front of you, they're not gonna sell it to you. They're gonna ask you, did you buy from us before? Or are you a first-time customer? And if you say I'm a first-time customer, they're not selling you anything. They're gonna tell you, okay, why don't you start from that right there? And when you buy 10 of them, then I'm gonna sell you this one. So that's how most brands do it. Like if you walk into a Rolex store and try to buy the flagship watch they sell, the submarines and Daytona, I'm not gonna sell them to you. They'll say, okay, we'll get you on the list for 2 years, but if you want to get it faster, you have to buy 3 or 4 the cheaper ones. So returning customers, increasing price, like you said, and just being exclusive. They have the market that they want to sell to anyway. So yeah, but these companies are not that many of them. Like in the whole world, how many
No.
companies like that are there?
Not many, not
Not
many.
many,
And
right?
if you compare that to big alcohol brands like Diageo, for example, they sell many bottles with a lot of volume. That's not at all the same business model. No exclusivity. I can buy a bottle of whiskey from them for 20 bucks, and that's it. No exclusivity. I can buy it in 1 hour if I want. The difference for the quality premium business model is the power of the niche business model that nobody can replicate. They
Yeah.
know that very well, so they use it.
And usually they get to do that without advertising. They
Yeah.
usually the high-end luxury doesn't advertise the traditional way that most brands advertise, that they try to enter a market. They try to enter, they advertise on online or on TV or on the radio. Those brands they advertise differently if they advertise at all. Okay, so I want to ask your opinion about interest rates and the Fed. What do you think? Because that's another macro force that is driving markets. And even if you're not a macro guy and you just a pure stock picker and you just look into whatever happened to the company, you have taken to go into consideration the Fed every once in a while when they act or when they don't act, and the markets is expecting them to act. So what do you think is going to happen? Are we getting a rate cut this year, or is it just noise and we're going to move into 2025 and then we might get them there? What do you think happens?
Well, the Fed said it really clear. They are data dependent, so they don't have the data before we have it. So we have literally have the same information that they do a couple of days
Yes,
before, maybe for them, but they have the same data. And what they see is that inflation is being reduced, but it's really hard to get to the 2%
yes,
inflation target they want. We'll reach, I don't know, 8 or 9% inflation rate in the US. Now it's back to 3.5, still not 2%. Still not 2%. So at the beginning of the year, people were expecting 7 rate cuts of
mhm,
0.25%.
yes,
So that's almost 2% interest rate cut. Now everybody thinking, okay, maybe we'll have a 1 rate cut. Things can change in only 6 months. So if you tell
yes,
me, okay, what will happen in 6 months? Maybe we'll have 7 rate cuts again. I don't think so. I don't think the shift will change again. drastically like this. People were much more optimistic at the time that the Fed will rate cuts, cut rates. Sorry. That depends. That depends of the inflation rate we have before. The Fed, the only thing that is impacting my portfolio with given higher interest rates right now is that you look at your different opportunities and you compare the PE ratio, the earnings yield, with the yield of the 10-year bond, a safe, risk-free bet. So if you want to compare the earnings yield of a stock, the earnings yield, by the way, if you have a PE of 20, you divide 1 by 20, that means 5%. So you can have the earnings yield of a stock at 5%, and you compare it to the yield of the treasury, which is at 5%, but that's risk-free 5% if you want to buy from the government. So the alternative has changed. In 2020, it was not the case. You had 0%, 1%. So you literally had no option to buy risk-free asset, to buy a risk-free 5% thing in your portfolio. Now the story has changed. So it makes you wonder, why should you buy an expensive stock that has 2% dividend earnings yield? You compare 2% dividend yield, that means a PE of 50. You compare it with your risk-free or 5% treasury bond, that's a different game. That's the only thing the interest rate changes in my investment method. I'm way more cautious about valuation, and everything I compare with a 5% bond. That's it.
Did you add bonds into your portfolio?
No. For the moment, I found opportunities that can generate more than 5%. So,
okay.
No.
So you don't think we're getting? So if you have to guess, what do you think we're getting this year? Are we getting any, or you think it's gonna the next few months they're gonna come just a little bit less than expectations, but not close to the target, and then the election is coming. So I'm guessing they're not gonna try to do too much around the election, at least the month prior, because they don't want to be political. They don't want them. You don't want the administration to say, okay, we got the rates down, so they want to be neutral. So I don't think they're gonna be doing any cutting in November unless there's a crisis and they have to, which is my case. My case is, I believe it's either one of the two scenarios. We're not getting any, we're getting zero, and everything is moving into 2025, or by the beginning of September, the economy gets in trouble, and then they start cutting big time. So it's either or. I don't think we're gonna get one. I think we're gonna get two. I think we're gonna get zero. I think we get the soft landing and start cutting, get the inflation down, because if you look at it historically, it's always the hardest part to get is the last 1% down from 3 to 2.
Exactly.
It's always the hardest to get and the longest. It takes more time. So I don't see it getting, and I didn't see at the beginning of the year to get 7 cuts. That was way too optimistic for my taste. But you know, the futures market sometimes just make some crazy predictions. So if I have to guess, it's two scenarios. We're getting none, or we get a lot of it early in September, in October.
With some panic.
Yes.
Yeah.
With some panic. Yeah, the panic is going to come with it, because so now the unemployment rate is 4%, right?
Yeah. I think Canada started cutting some rate last week. So some countries have started to cut rates, but Canada said that they wanted to cut before they reach 2%, maybe before. So that's logical with what they have said before.
Yes.
What the Fed has said is our target is 2%.
Yes.
I don't know if they have said that they will cut, even if it's not 2%. I don't know.
No, they didn't say that. They didn't say we has to get to 2% and then cut. My guess is because I watched the press conference and he didn't say that, but he didn't say we're going to start cutting leading to it. and he didn't give a mark that say, okay, when it gets to 2.9, we're gonna start cutting. He didn't say, he didn't explain. It was nothing concrete. It was just so we are guessing. But my best guess is that we have to approach it like we have to be quite there for them to start cutting. So that's why I don't see it happening in September. But the unemployment is going up to 4% now. It's up to 4%. And I believe it's the 4.2% mark that the Fed might have to do an adjustment. I don't know what the adjustment is, but the 4.2, because you don't want to get too high unemployment going to the election either.
Mm-hmm.
Because it's supposed to be your job to keep unemployment down. So if unemployment keeps coming up and you're not doing anything about it, then you're not doing your job. But you have the most difficult job. You have to get the unemployment down. You have to get the inflation down. So how do you? I mean, sometimes we're making fun of them, the Fed, but they have a difficult job to do, right?
Yep. We had the same thing beginning of 2023 when with the regional bank crisis. They said the Fed had two choices. They can cut rates to save banks and save the economy, or they can but this will lift inflation, so you have an inflation problem,
Yes.
or you keep the rate like this to do the battle with inflation, but you let the regional banks fail. And they said, okay, this is the end for the Fed. Either the economy collapses or you have inflation all over the place. Well, these two scenarios did not happen. Some regional banks failed, some survived, and the inflation is still here, but lower than expected, lower than before. So all these apocalyptic scenarios, I don't think. What I see is that nobody is predicting that the Fed will increase interest rates. That could be worrisome. Nobody thinks the Fed will increase the interest rates for any reason.
Yeah. Yeah.
That could be a bet over there for
Yeah.
banks or something like this.
Yeah. If it was the big banks that were in trouble, that could have been a different story. I mean, if it was JP Morgan or Bank of America in trouble, I think they will say, okay, we can deal with inflation for a bit longer,
Mm.
and we have to save the banks. But it was just regionals, so and that's one of the reasons that I will never touch regional banks. Is for this precise reason. They are not protected by
Mm.
the Fed. They are
Yeah,
not
you
protected by the
you have
Fed.
some good companies, but yeah, it makes me think about what you do with the cash as a shareholder, and we said before about Berkshire Hathaway holding too much cash, but we forgot to mention that Warren Buffett said that he wants to keep some cash just in reserve, not invest in treasuries, just to cash. Maybe it's 50 billion or 60 billion
Yeah.
dollars of cash. So this will not be invested in stocks, bonds, etc., etc. And if you said he has 150 billions worth of cash, it says that you have 100 billion worth of cash invested. That's a decent net income. So Warren Buffett could be very happy if the interest rates is increased over the years. That's a good way to generate safe income. And a lot of we see on eToro that a lot of people think like this. They think in terms of Nvidia right now, and they think in treasuries and how to get safe 5% or 6% yields. Uh, more people are aware of this. What people don't think right now is that the Fed will increase interest rates. Um, I don't know how to play this bet. That's why bonds for me are too complex, and
Mm.
I'm stupid enough to buy stocks, so I will just give it to stocks. That's it.
Yeah. I'm
If I had,
not investing in bonds either. I'm just at all. Actually, I don't like them. And you know what? Buffett he wasn't always invested in treasuries. We're talking about the short-term treasuries, not talking about long-term.
Mhm.
They are the one that they're like cash or cash equivalents. That's the kind of treasuries he's invested. he was always invested in those. He wasn't holding actual cash. Maybe some of it was cash, but the most of it was in short-term treasuries, and that you can trade them for. So they're basically cash. They're actually better than cash in most cases. So I think even if the Fed cuts rates in the future, I believe the cash that Berkshire Hathaway gets from all the companies on a quarterly basis, they're still going to be invested in short-term treasuries for the time being, and instead of holding them in cash. And if the rates go up and they are the where they are now at around 5%, then good for them. But maybe it will be another. And you know what? He's getting 5% risk-free. So why bother? Why bother look for anything else? Just, I mean, if you study his quotes one by one, then you know what his next move is. I mean, when he's saying you have to wait for the right pitch, I can wait there and not hit and not throw, and we wait for the right pitch. He's waiting for the right pitch. Doesn't matter how long he waits.
Yeah. Yeah. But to come back to interest rates,
Yeah.
I think nobody that you interviewed on your podcast lives in the era of high interest rates when interest rates were above 10%.
Yeah.
For 40 years, it's a declining interest rates environment.
Yeah.
And all my investing life, it's not that is very short. I've always lived with 0% interest rates, and all my friends have
That's well.
always lived with 0% interest rates.
You and me both.
Yeah, yeah. See, you're young. See, you're young. You're 28, right? 28.
Yeah, yeah.
Yeah, yeah. And we don't know how to invest in a high interest rate environment. And we talked before about real assets, oil assets, real tangible companies that were a lot of fun before in past decades. Right now, if you had invested in oil stocks 10 years ago, you would not have been enjoying your time. It's not a fun moment. Right now, tech is leading the index. But yeah, we will see what will happen. My guess is that interest rate will never go to 0% again. If I gun to my head, if I had to make a decision, we will maybe never see interest rates below 2%. It was an exceptional situation after 2008 and after COVID, and they managed to navigate the current environment. I'm talking about the Fed. And in 2020, they said, no, we'll not touch rate for until 2024. We'll keep it at 0%. And when you see inflation at 10%, the only thing you can do to calm inflation is to interest rate. It's to boost interest rates, to increase them. So whatever they say, you cannot really trust them because, again, they are data dependent. What if inflation picks up and instead of 3%, you have 3.5, 4, 5% inflation because of any reason? Right now, we don't see any wage inflation, but inflation can come from other part of the cycle, other part of the economy. Right now, I think you have the housing prices that are stabilizing or dropping. You see the wage inflation that is dropping also, so that's good to tame inflation. But what if there is another crisis, and for any reason, it could be another country or a part of the economy or a cycle, for any reason the inflation goes back to 5%. That's not uh, the best case situation for most people. That's not what everybody has in mind. Everybody thinks that the inflation will be 3% and will go down to 2% slowly but surely. Everybody expects a soft landing and buys the tech high valuations right now. I mean, a lot is priced in the markets right now. If there was in a recent interview of Howard Marks that said that markets are not very expensive. It's just that it's average plus. It's neutral plus. It's not very expensive like we've seen in the dot-com bubble, but it's kindly. expensive,
Yeah.
quite a bit. Not very pricey, but we are at the high range. So
Mhm.
people are on the high range of bullishness, medium to high bullishness, and nobody is pricing in increase in interest rates. That's the way I see it. So I'll be very cautious about it.
Yeah, I don't. You're right. I agree with you. I don't think we're getting 0%. I don't want to say never again because sometimes you might get extraordinary circumstances that they're gonna have to drop them quite low. But is I don't think we're going back to an environment that is near zero or zero, or in some cases minus for that long, for years. I don't think we're going back to that. I don't think so. So when we talk about low rates now, it's going to be 2.5%.
Yes.
So the low now is 2.5%, and the high is not 5. The high ish, it could be in the 6 or 7.
Yeah. And again, Warren Buffett has beautifully understood it now
Mhm.
that he borrows in yen in
Mhm.
Japan at near zero interest rates. And he borrows here at 5%. So you get 0%.
Yes.
You borrow for 0% to pay, and then you get 5% risk free. You can edge with other countries if you want. And
Yeah.
but inflation is definitely a risk. You see, a big risk could be that inflation continues and we get to a situation like Argentina or Zimbabwe or all these countries with very high inflation
Mhm.
that they can't control. It has not a big chance of happening, but it can be a risk. And if this is a risk, that will be terrible. But the stock market will go up. That's
Of
stock
course.
market will go up because
Of
of
course, the
inflation.
stock
But
market will go up. The stock market will go up no matter what.
everything, all your costs, but
Yeah. Yeah, yeah, but to be fair, I don't think, I mean, we can compare Argentina and some of the African countries that they get inflation of 10% per month. Month over month, there's like 10% up from the month prior. That's just not what has happened in the past. We maybe had 10% year over year, which is it kills your purchasing power as an individual. It completely wipes out your purchasing power. So it's not fun. And especially when you have the all that debt. So I don't think we're gonna have 10 or 20% month over month that they have in Turkey or in Argentina.
oh, it's crazy.
That's crazy, yeah. And But yeah, the 0%, we're not gonna see it anytime soon. You know what? We might see it one more time in our lifetime. If I have to guess, I would say you're gonna see it because if you just do the math, and Charlie said at least you have to expect one time in your lifetime to lose 50% of your money. He was referring to the 2007, 2008 crisis. So yeah, so if I have to guess, in our lifetime, we're gonna get one more of those. So around that, you can get 0%, but 0% for no reason at all. I don't think we're going back to that. I don't know in Europe. In Europe, they were comfortable going going minus. Uh,
Yes.
so I don't know how comfortable they are going back to zero, but I don't think we're going back to zero. I agree with you. I think 2.5%, it will be the zero.
The floor, yeah.
Yeah, the floor. And then from there, the 6 and the 7 will be like high, and then the average is gonna be like 4 or 5. What we are now, basically. A little bit less than
Yes.
what we are now is going to be the average.
Mm, yeah. Yeah, that's true. I have nothing to add to this. That's too
Have
complex. I'm
nothing to
thinking
add to
of
it. Have nothing to add to it. It was a good conversation.
yeah, that was very good. Thank you
We
for
touched
having me.
we touched a lot of we touched a lot of things I want to talk to you about, and I'm sad now that you're not gonna be in London. Why don't you take the train and come just for a day?
I will see you in Cyprus directly. That will be easier. You can spend the day. It will be sunnier. It will be more fun.
How is the weather in France?
The summit in France.
No, the weather, the weather. How is the weather now? Is it sunny? Is
Oh,
it cold? Is
it's
it?
very sunny. I'm living in the south of France,
Yes,
so not in the rainy Paris, but
yes.
in Marseille, which means we have a lot of sun and we have a lot of wind. So if you go outside, it's quite fresh, but you can go to the beach and have a great time with the sunny days and long days. So life is good. We have very good summers over there.
So, so where do you live now? You live near Marseille, you said?
In Marseille, yes.
Marseille. So sometimes I text you and we text back and forth and you tell me that you're on a train going to Paris. How far is the train from Marseille to Paris?
Yeah, well, all the business is in Paris, so you have to take the train. It's 3.5 hours of train. It's very
Oh,
convenient. You have the Wi-Fi during the train, and you can work.
I'm
So
work, yeah,
I love transports. Strangely enough, I love taking 10-hour long flights. I love long trains. Uh, I love that's the kind of ambience I like. Everybody is here. You have nothing to think about
yeah,
beside working with the Wi-Fi. You
yeah.
listen to podcasts, you watch some videos. Life is good. Life is good.
Yeah, as long you have Wi-Fi, I agree with you. As long you have your Wi-Fi, you have your laptop, you can do some work on it, then there's no problem. If you don't have Wi-Fi, you don't have a phone, and then you have to sit and look around for 10 hours.
That's
Then
a different game. If you have not recorded, downloaded videos or something like this, anything
yeah,
to read, that's a different game. If you have no books for 10 hours, good luck.
yeah,
Good luck. Well, our parents or grandparents, when they did the transport like this, maybe it was not plane, but the train, they did not do anything for during the train. They had a book, but I know some grandparents, friends of mine, that they have their grandparents during long flights. They still, even right now, they do nothing during the flight. It's an 8 hour flight. They do nothing because they've been doing this their whole life. They don't do they don't watch movies
yeah,
or read a book. That's strange, and that's the kind of philosophy I like. In long-term investing, as we said, we have to enjoy watching the grass grow. We love watching the paint dry because
yes,
long-term,
yeah, yeah,
nothing moves in the short term. We talked about elections before. Okay, that's sexy. That's a good headline. In the coming 2 weeks, it will be a mess. That's good. That's exciting. There is no change to the portfolio, no change to the fundamental of the business. The management is
yeah,
not changed at all. So yeah, as long-term shareholders, we like the long-term view of our
yeah.
investments. We like when things move slowly. And yeah, so I highly respect the kind of people that do nothing for 10 hours in a row doing a plane.
Yeah, you know what? When I was going back and forth to university in New York, and I was flying from Cyprus to London, I was changing there. I was changing a plane there, or maybe staying the night. But if I wasn't staying the night and I was just getting on another plane after a couple of hours, I was making sure I didn't sleep the night before. So I was sleeping the
That's smart.
yeah. But if that didn't happen, I was up watching movies all the way. It was prior to Wi-Fi on planes, so I didn't have. And but yeah, traveling, especially alone. If you have company, if you have a friend, then it's a different story. Then you can then take me to Australia non-stop. I
Hmm.
have no problem. But by myself with my thoughts, yeah, it's not pleasant.
Yeah. I
But
think you're a big movie guy. So yeah, you take movies with you. That's good.
yeah, yeah, I'm a huge movie guy. And what I was watching the other day, and I was like, yeah, I was watching I was watching James Bond, okay?
Which one?
Casino Royale.
Hmm.
So I watched that movie when it first came out, and then I
Okay.
haven't watched it since. No, I watched it maybe a bit later, but I haven't watched it since in the last 5 or 6 years. And I was I was just scrolling the other day, and I put it on from the beginning. And then it came to me that the whole storyline is because the villain, the bad guy, he borrowed some money and he shorted an airline. Okay. He shorted an airline and his bet went against him and he got broke. And what was his way to get back his money? To play a poker game.
Is that the pitch of the movie? That's the way the bad guy becomes the bad guy?
No, the bad guy, no, the bad guy was a bad guy, but he placed a bet, a short selling bet on an airline, on a US airline, with a plan to blow the aircraft so the price can go down. But that didn't happen because of James Bond. And then the price went up. Okay, he lost his money, and the bad guys that gave him the money wanted their money back. So what was the way to get his money back? Play a poker game in Casino Royale. And I was like, wow, I watched that movie a couple of times and I missed that part. But now that I do this, now that I'm an investor, I just clicked and I said, okay, he's shorting airlines. What a stupid move to do. You don't short airlines. You don't go long on airlines. You don't touch airlines.
You don't touch airlines. That's better. For your financial health, that's better.
Yes.
Mental health, that's better to not touch.
Okay.
Well, thank you, Dimitris, for the invitation. It was very nice talking to you.
Thank you for coming, my friends. It was a great conversation. And I'll talk to you soon.
Yeah, bye-bye.
All right, bye.